let's have a quick talk about position sizing and the importance of position sizing. It's vital that we have really good discipline and that we are consistent on our position sizing. And I'm going to show you a couple quick tools that'll help you position size better right here inside the step system and in the scouting reports each week. You can use this little tool to help you position size more properly. So I'm going to go ahead and delete this real quick and show you starting from scratch. So we've been using BSX in quite a few of the examples. Again, I honestly don't know if this trade is going to run up or if it's going to run down. I believe the trend and the tendency and the pattern and the setup, everything points to a good bullish setup. And because we don't know the outcome and we have a favorable risk-reward ratio scenario here and an increased odds of probability that the prices go up, but none of that guarantees the outcome, it's vitally important that we use proper position sizing and stop loss. And if you look up here, again at the bull watch list right here, it'll give us the actual numbers that we should look at. So we should enter above 42.71. We should put a stop at least below 42.25. And then we can target 43.60 to $45. And as I scroll down here and we look at the chart, you can use this little tool here where you can use what's called a long position or short position, a little calculator here. And when we have that tool selected, I can go in and say, okay, well, let's put in the order right here. And we were going to buy if it went above 42.71. So I'm good with the 42.75 trigger. And I can tighten my stop up down below for that 42.25. And I could go a little looser. I can go down below 42, a little bit more conservative methodology, and get that stop down around 41.99 or so. And then I believe this has got good upside potential. I can put that up there at the target of 45 or so. And here it gives me the target. And if you look at the numbers here, it says, okay, potential target $2.27. That would move your account up. And then let me show you the numbers here. Once you have this activated, you go click on this little cogwheel right here. And this little cogwheel is important. You go click on that, you open that up, and it allows you to set your account size and your risk tolerance. And of course, I'm just using a simple $10,000 example because the math's easy. And we're using a 1% risk tolerance of that account. And so that's the setting in there. Make sure that's set up correctly for you. And then once you have that set up, it will then tell you the number of shares. If you look right here, I'll zoom in on that for you. It says quantity 131. So that would be the appropriate position size based off of this entry price, that stop loss, that account size, and yet that specific risk tolerance, that 1% of the account value. So use these tools. And again, position sizing is more important than where you place the stop. Placing the stop, the entry and the stop are important. The position size will determine the monetary risk. And don't forget to factor in those commissions as you determine the reward and risk. And again, position size conservatively, because again, there are old traders and there are bold traders, but there's no old bold traders.